Hi everyone, welcome to another Ichimoku Cloud practice episode. This is my second video today. I just published a video about holiday gift giving because guess what? Tomorrow is Thanksgiving Day here in the US, and the day after that is going to be Black Friday and then Cyber Monday, because those are the days that every American is going to start shopping. So I pushed out this holiday gift giving ideas, which is basically based on financial ideas, like what to give your kids that is more like an investment than a consumer kind of thing. So I just published that. Go ahead and watch that. But now I was just doing my research and analysis for TickMill, and something interesting caught my eyes. So as you know, tomorrow is going to be light in the US. So the only data that we have is going to be from Switzerland and Germany, which is going to impact the euro crosses. So I looked at the Euro Swissy pair and I found something interesting. Now, normally I don't analyze the minor pairs, but I was curious, and especially because tomorrow is going to be light for greenback. But before I get started, let me just point out that trading forex involves a high risk of loss. I personally do not day trade forex. I invest in currency pairs in longer term, but because companies asked me to do research analysis, I've been doing that for them, and I thought it would be a cool idea to share with you the behind the scenes of my strategy development process with you so that you can also practice with me. Now, I use Ichimoku and my Invest Diva Diamond Analysis, or the IDDA, across all assets. I use it for stocks, I use it for cryptocurrencies, I use it for ETFs, and I also use it for forex. So this practice is going to help you with any other asset that you may be investing in, and that's the reason why I'm sharing it with you. If you don't trade forex, don't worry about it. Neither do I at this point, but I do use Ichimoku, and it really is my magic sauce in creating awesome investment strategies. So let's go take a look at the Euro Swissy pair. And if you love this video, give it a thumbs up, share it with your friends, and don't forget to subscribe to my channel. This is my brand new channel. All right, so this is the Euro Swissy daily chart. I already went ahead and created some Fibonacci traceable levels. So in the bigger uptrend that we had back in 2017 that ended in 2018, we have these Fibonacci levels. And then for the most recent downtrend that started in April and ended in September, we have this Fibonacci traceable level, which actually kind of explains what is happening right now. Now, what happened is that after this downtrend kind of bottomed out, the pair has been struggling to find a very strong bullish momentum. In fact, it hasn't been able. But one thing that we do have going on for Euro Swissy is that it has been forming higher lows. So the lows are going higher and higher again. And then it had one failed attempt to, after it broke above the Ichimoku the first time back in October, it wasn't able to really gain the momentum, the bullish momentum we were looking for, and then it actually broke below it just to form this higher low and then go and break above it again last week. Now, this is its second attempt to break above the Ichimoku Cloud and really complete this bottoming out over here. It's been kind of consolidating over here, but we do have another thing going on for it, which is the future Ichimoku Cloud is bullish, and the Chico span, if you zoom in over here, you can see this is the Chico span. The Chico span has just broken above the Ichimoku Cloud as well. So that is actually a very good bullish sign for us. Now, one other thing that I do want to point out here is that yesterday I looked at the euro dollar pair and we said that we may have a bearish signal over here if the pair breaks below 1.099. Now, it did not do that. And we have another bullish thing going on here for euro dollar as well. But because this is kind of different than Euro Swissy, what do we understand from comparing these two euro crosses is that the quote currency, which in this case is the Swiss franc, and with euro dollar, the quote currency is the US dollar, they are going to be very powerful in determining the fate of this euro pair crosses, both euro Swissy and euro dollar. What does that mean? That means, so the quote currency is the Swiss franc and it's quoted second. So for euro Swissy to go higher, we need the Swiss franc to get weaker, right? So if the Swiss franc gets weaker, then we will get a higher bullish momentum. Of course, if euro itself gets stronger, that would be awesome too. It will help with the overall euro Swissy bullish momentum. But right now that we have kind of a mixed signal across euro crosses, the quote currency is the one that may have a say in which direction the pair is going to go. So tomorrow's GDP out of Switzerland may actually play a role. If it comes lower than expected, then euro Swissy could go higher. I hope this made sense. Thank you so much for tuning in again. And if you're living in America, happy Thanksgiving. Eat a lot of turkey. We're actually going to my sister's tomorrow, and I'm super excited. But unfortunately, my daughter Jasmine is sick. So hopefully she won't be too cranky while we travel over there. But if you don't live in America, then, well, have an awesome day anyway. All right. I'll see you guys again tomorrow with more updates on my YouTube channel.